Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. Traders are still feeling their way back into the market after the Labor Day weekend, and equity indices have traded in relatively tight ranges just below their all-time highs. August was a record-breaking month for the S&P 500 in performance terms, so perhaps it was only to be expected that September might be something of an anticlimax, especially as a very weak non-farm payrolls number seemed to diffuse concerns about an early taper by the Federal Reserve, who next meet on the 21st and 22nd of this month. One area of the market that has remained active in the opening days of September is insider trading by C-suite executives and major shareholders. The pattern of trading that has become so familiar since the end of Q1 persists, and once again, sales far outweigh purchases this week. Though there have been buy-side trades that have caught our eye, more on those shortly. Some familiar names continued to lighten the load last week. Robson Walton sold more Walmart, 1.298 million shares in fact, at prices between $149.04 and $148.45 to raise a total of just over $193 million. Jason Mironov, the private equity executive who sits on the board at ZoomInfo, sold a further 991,362 shares in the company at $66.03 a share, raising $65,459,930. Fellow director Todd Crockett did the same trade, as did the private equity firm they represent, TA Associates. These sales were all part of a clutch of 8 insider trades in the Vancouver-based tech firm stock, none of which had value of less than $64.6 million. Mark Zuckerberg, the founder, CEO, and chair of Facebook, kept his finger on the sell button last week, selling 3 tranches of 77,300 shares in the social network and advertising giant. Each trade generated sales proceeds in excess of $29 million. Just across Silicon Valley, Sergey Brin, a co-founder of Google, sold another chunk of Alphabet in 2 trades of 13,889 shares at between $2,908.08 and $2,883.29 per share to raise just over $80 million across the 2 trades. Lastly, there were some notable sales and option exercises at Coinbase Global, with the chief product officer, chief legal officer, and another director either cashing in stock options or selling stock. None of these sales were that sizable. The largest raised $5.435 million. The optics aren't great, however, as the sales were reported just ahead of news that the SEC was threatening to sue Coinbase if it pressed ahead with plans to launch a new crypto financing product. Coinbase stock fell $9 per share on that announcement. 2 purchases caught our eye in recent days. They were notable not just because they were on the buy side, but also because of who made them. The stock in question was Chipotle Mexican Grill, and the buyer was none other than Pershing Square Capital Management, the hedge fund run by Wall Street legend Bill Ackman, someone who is rarely out of the headlines in the financial media. Pershing Square Capital Management is a $13 billion plus hedge fund that was founded in 2003 and is best known for its activist stance, which it uses to raise shareholder value in its investments. The fund has a long association with the fast food and casual dining industries and has launched campaigns against McDonald's and Wendy's. Pershing Square Capital Management has been a significant shareholder in Chipotle since 2016, when it acquired a 9.9% stake in the business. By 2018, the stake had grown to 10.3% of the company. Mr. Ackman's thesis was that Chipotle was significantly undervalued. He was proven to be correct because in the intervening 3 years, the Chipotle stock price has risen by 287%. Pershing Square sold stock in January this year at prices ranging between $1,345 and $1,333 per share. The sales allowed the fund to take $100 million off the table, and though the fund has not traded since then, until this week, almost all other insider deals in Chipotle have been on the sell side. The fact that Pershing Square has purchased 41,208 shares of Chipotle at a price that's more than $500 per share higher than where it sold the stock in January is worth noting. The two trades represent an investment of around $78.7 million, so they are not like for like with the earlier disposals. However, the fact that someone who has been such a shrewd judge about the true value of Chipotle in the past is now buying the stock again and at much higher levels is a vote of confidence in the stock, and one that we should take notice of. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.